How does FAFSA help with federal student loans versus private loans? Imagine trying to navigate a maze of college funding options without a map. That's where the free application for federal student aid, or FAFSA, comes in. It's the essential step to unlock federal student loans, but it doesn't connect you to private loans directly. When you fill out the FAFSA, you're providing detailed financial information about your family income, assets, and household size. This helps the government determine how much financial aid you qualify for, including grants, work-study programs, and, most importantly, federal student loans. Federal student loans are designed to be student-friendly. They come with fixed interest rates set by the government, which are usually lower than private loan rates. These loans also offer flexible repayment options, like income-driven plans that adjust your payments based on what you earn. Plus, most federal loans don't require a credit check or a cosigner, making them accessible to many students. If you qualify for subsidized federal loans, the government pays the interest while you're in school, which can save you money over time. Private loans, on the other hand, are offered by banks, credit unions, and other financial institutions. You don't need to fill out the FAFSA to apply for private loans, but lenders will evaluate your credit score and financial history first. Often, private loans requiring a cosigner, especially if you have limited credit history. These loans tend to have higher interest rates and fewer repayment options. They also lack the borrower protections and forgiveness programs that federal loans provide. From a financial planning perspective, federal loans are like low-risk, fixed-income investments. They have predictable terms and government backing, which makes them safer. Private loans are more like private equity investments, riskier, depending on your creditworthiness, but sometimes offering higher borrowing limits or faster access to funds. It's best to think of federal loans as the first line of defense in funding your education, with private loans as a backup if federal options don't cover your costs. In practical terms, students should prioritize filling out the FAFSA to access federal student loans first. These loans tend to be more affordable and flexible, helping you manage debt better after graduation. Private loans should only be considered after you've exhausted federal aid options, since they carry higher costs and less protection. Understanding this difference is key to making smart financial choices and keeping your education affordable. In summary, FAFSA is the gateway to federal student loans, which are safer and more manageable. Private loans operate outside of FAFSA and often come with higher risks and costs. Knowing how each works helps you plan your college funding wisely, balancing your needs with your ability to repay.